All right, so you want to know about pin bars.
Yeah, pin bars, they're cool little patterns.
They are. You know, a lot of our listeners are already trading and using candlestick patterns, but this deep dive is for anyone who wants to really understand the pin bar and how to use it.
Yeah, candlestick patterns can really be helpful for traders. They can help you sort of understand what's going on in the market, like the sentiment of the market.
Yeah, it's because they're visual, right? So they're giving you a picture of the price action. And the pin bar is especially interesting because it has such a distinctive shape. It's kind of hard to miss.
Right, like visually it's simple, but it can be powerful if you know how to use it.
Exactly. So let's break it down. First of all, just to recap, what is a candlestick pattern showing us?
Well, each candlestick shows what happened to the price over a specific time frame. Like let's say you're looking at a daily chart. Each candlestick represents one day.
Yeah, so the candlestick shows us 4 key pieces of information.
Yeah.
Right.
Exactly. You have the open, which is the price the asset started trading at that day, and the close, which is the price it ended at.
And then the high and the low, which were represented by those lines extending above and below the body of the candlestick. Those are called wicks. Sometimes you'll hear them called shadows.
Right. So you're basically looking at the whole range of price movement for that period, all in one little picture.
So the pin bar is a specific type of candlestick pattern. What makes it stand out?
Well, the pin bar is like, it's a small body, right, with a long wick sticking out on one side.
It literally looks like a pin. That's why it's called that.
Exactly. It's pretty easy to spot.
So what's going on when we see that long wick on a pin bar? What's it telling us about the market?
That long wick is basically showing you a rejection of price. Like, let's say you have a pin bar with a long wick above the body. That means buyers tried to push the price higher, but the sellers came in strong and pushed it back down.
So it's like the buyers got rejected.
Right, and that rejection can be a clue that the momentum might be shifting.
Okay, so that failed attempt to break higher or lower if the wick is below the body could be a sign that the trend is about to reverse.
Exactly. That's why pin bars can be really powerful signals. They're like a little heads up that something might be changing.
Now, I've heard there are 2 types of pin bars.
Yeah.
Bullish and bearish. How can we tell them apart?
Okay, yeah. So a bullish pin bar has a long wick below the body. That means the price tried to go lower, but the buyers stepped in and pushed it back up.
So that suggests the price might be ready to move higher.
Right. A bullish pin bar could signal a potential upward reversal. And then a bearish pin bar is the opposite. It has a long wick above the body.
Which means the price tried to go higher, but the sellers rejected it, pushing it back down. So that one suggests a potential downward reversal.
Exactly. It's all about which direction the price got rejected.
This is making sense. But wouldn't it be risky to base trading decisions only on a pin bar?
Oh, absolutely. Pin bars are just one tool in your toolbox, you know? You don't want to rely on them alone. It's like trying to build a house with just a hammer.
Uh-huh, yeah. I see what you mean. So what else should we be considering when we see a pin bar?
Well, a lot of things, actually. You want to look at the overall trend, first of all. Is the market in an uptrend, a downtrend, or is it ranging?
Right. So if you see a bullish pin bar in an uptrend, that's more confirmation that the uptrend is likely to continue. But if you see a bullish pin bar in a downtrend, you might want to be more cautious because it's going against the trend.
Exactly. You also want to look at support and resistance levels. Is the pin bar forming near a key level? That can make it more significant.
And don't forget about volume.
Oh, yeah, volume's important. A pin bar with strong volume is usually a more reliable signal.
I know some traders also like to use other technical indicators like moving averages to confirm the signal from a pin bar.
Right, and you can even look for other candlestick patterns that might be forming around the pin bar, like an engulfing pattern or a double top or bottom. Those can help strengthen your analysis.
Okay, so it sounds like there's a lot that goes into interpreting a pin bar correctly. It's not just about spotting the shape. You have to understand the context too.
Exactly. And it's important to remember that pin bars are not foolproof. Sometimes they work, sometimes they don't.
Yeah, there are no guarantees in trading, unfortunately.
Nope. But pin bars can definitely give you an edge if you know how to use them. They can help you spot potential reversals early on and make more informed trading decisions.
All right, so to wrap things up, we've learned that pin bars are visually distinctive patterns that can signal a potential change in trend. We've also learned that it's important to look for confirmation from other indicators and the overall market context.
And don't forget about managing your risk. Never risk more than you can afford to lose.
Absolutely. So as you continue learning about trading, think about this. How might pin bars help you see the market in a new way? Could they open up trading opportunities you hadn't considered before?
The market's a puzzle, and pin bars are just one piece. But every piece helps you see the bigger picture.
That's a great way to put it. Keep exploring those patterns, and happy trading.